The roller coaster continues with SoFi after they had an absolutely awful day in the market, down over 10% just today after they reported their Q1 2024 earnings. You might be thinking to yourself, wow, this must have been an absolutely terrible earnings. They missed a bunch of numbers. They had a terrible Q1. You would be very wrong. There is literally one thing in the entire report that made the stock go down today. We'll talk about what specifically that one thing is, and then we'll talk about all the other really, really great things and why I still believe SoFi is a great growth company with a really bright future in 2024, 2025, 2026, and beyond. We're going to get into all that in this video. I'm super excited to dive into it. But first, if you're new here, I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm also a stock market investor. Most importantly for this video, I'm a SoFi shareholder, okay? If you're not subscribed to the channel already, become one of those 3,500 or so people. Helps out the channel in a major way. Thank you so much for doing that. Okay, let's get into it. And the first thing I want to do is talk about what I did with SoFi shares today. Did I sell SoFi today? Absolutely not. I bought more shares on the dip, just like I said I was going to do in yesterday's video. We got a 10% drop. That's a pretty substantial drop, dropping down to the low sevens. SoFi's sitting at $7.04 right now. So I went ahead and bought at the open for $7.18. I bought a few hours later at $7.16. And then I bought really close to the close at $7.03. So 3 separate lots of shares today. Nothing was a massive buy. I've already built up my SoFi position in a major way. These are just bonus shares that I'm adding on whenever I see the stock drop in any meaningful way. So before we get into that one thing that made the stock drop 10% today, I want to talk about a few highlights just to show you that this was an absolutely amazing quarter. We'll get into some of the finer details later in the video, but on the headline number, 54% combined revenue growth in tech platform and financial services drove the 26% growth in total adjusted net revenue, and management raised the 2024 full year guidance, okay? If you're looking on a GAAP basis, roughly $645,000 was that total revenue number, which is a 37% increase from the GAAP numbers a year ago. When we're looking on the adjusted net revenue, with what SoFi likes to use, $580 million versus $460 million, which is a 26% increase on a year-over-year basis. Still very, very respectable. On the profitability side, EPS per diluted share was 2 cents. That doesn't sound like a lot, but expectations were for 1 cent of EPS. When your expectations are for only 1 cent and you beat by 1 cent up to 2 cents, that's a 2x beat on the bottom line. That is substantial. Very, very impressive. That's their second quarter in a row of profitability on a GAAP basis. And that's compared to a loss of 5 cents per share in the year ago quarter. And another really important milestone that they reached on the profitability front is that all 3 of their business segments, lending, financial services, and tech platform, are all now profitable. There is no business segment that is losing money at SoFi. That is a huge feather in SoFi's cap, especially for the growth beast that they are. To be able to say that every single business segment is bringing profit to the bottom line is a huge milestone. They should be very proud of themselves. Investors should be very happy about that. So now let's get into the guidance. We'll do the positive things first. All the 2024 full year guidance numbers were raised. Net revenue guidance of 2.39 to 2.43 billion, up from 2.365 to 2.405. So that's a raise on guidance. They raised their adjusted EBITDA numbers from a range of 580 to 590 million up to a range of 590 to 600 million. GAAP net income, big beat on guidance here. The prior guidance was for $95 million to $105 million. Now they're saying $165 to $175 million of GAAP net income, and that does include a $59 million gain of extinguishment of debt in the first quarter of 2024. That's where most of that's coming from, but it was raised another $11 million on top of that. And they say that earnings per diluted share is going to be in a range of 8 to 9 cents versus a 7 to 8 cents prior. And then the tangible book value growth, massive increase, $800 million to $1 billion, up from a prior guidance of $300 to $500 million. On the upper end of that, that's a 2x. That is very, very impressive. So all the full year guidance numbers were beat after beat after beat after beat. So you might be thinking, why is the stock down 10%? I think it's a massive overreaction, but the reason the stock is down 10% is because of the Q2 2024 guidance that they gave. This is the first time SoFi's given a Q2 guide, and it's probably the last time time based on this 10% drop. So Wall Street expected $580 million of adjusted net revenue, while SoFi just said their low end for Q2 is going to be $555 million and their high end is $565 million, which is a 14 to 16% year over year growth number. That is definitely lower than we'd like to see with SoFi. SoFi is a company that's been in the 20 to 30, sometimes even 40% growth numbers on the adjusted net revenue side. And now to see it all the way down to 14 or 16% is not great. Is that the end of the world with SoFi? No, and that's very obvious and evidenced by the fact that full year 2024 numbers are still really, really strong on the guidance side, and they were raised just recently. So to me, if you're a long-term investor, that's a big old nothing burger, and you don't need to worry about it at all. Yes, they might have a weak Q2, but if they're going to have a strong full year 2024, Q2 is just going to be a little bump in the road. Q3, Q4 is going to be great. That's pretty much what they're saying here. They just want to let the market know that Q2 might be a little weaker on the revenue growth side. Also in the Q2 2024, they said adjusted EBITDA is $115 to $125 million and GAAP net income of $5 million to $10 million. Those GAAP net income numbers are substantially lower than what they reported in Q1 of 2024, so that's not great to see. But what is really great to see is that it's still positive. It's still EPS positive on a GAAP basis. As long as they're not dipping back down into being EPS negative on a GAAP basis, then I'm going to be happy for full year 2024. It's not always just a straight line, straight up, perfect quarter after perfect quarter, tons of growth every single quarter. No, it doesn't really work like that. But when you average it out on a yearly basis, the growth rates are still absolutely ridiculous on the EPS side. So I'm not mad. So if you're wondering why the stock's down 10%, that is why. It's because of that Q2 guide being so weak in comparison to Wall Street estimates, specifically that revenue number, all right? Do I think that that warrants a 10% drop in the stock price? No, absolutely not. That's why I was out there buying more shares today. When you have a growth stock that's already at a high valuation and the growth rates are dropping a little bit, Wall Street is quick to disrespect the stock. I personally believed that if they reported a beat on EPS, I thought the stock was going to go up no matter what, because that's their second quarter in a row of being GAAP profitable. And if they had a beat on that, I thought it would just put a lot of momentum back in the stock. That one little thing in the Q2 guide made the stock drop in a major way. Wall Street's really finicky. It is what it is. Nothing to get mad about unless you're a trader. If you are a trader of SoFi, this might be frustrating to you. If you're a long-term investor of SoFi, this is not a big deal at all. So let's take a second, get a little more detailed and look at each business segment. I want to start by looking at lending. Interest income was up very nicely at 33%, and non-interest income was down very substantially by 53% in the quarter for total net revenue to be down 2% on a year-over-year basis. We knew that that was going to happen. They guided for that, for there to be about a 92 to 95% of the 2023 levels for full year 2024 on the lending side. Contribution profit is down 1% from the lending segment. Not a big deal overall. Next, let's look at the technology platform. Technology platform total net revenue is up to $94 million, up from roughly $78 million for a 21% increase. Very respectable on the tech platform side, while expenses for the tech platform only rose by 1%. When you have revenue for this segment increasing by 20% and expenses only rising by 1%, first of all, wow, the management team is running that business segment very impressively. And two, that means the contributable profit is going to explode, over a double up in the contributable profit when you compare to the year ago quarter at a 107% increase all the way up to $30.7 million of contribution profit from the tech platform. Very impressive. That's something I was critical of last year. The tech platform numbers were not looking good about 4 or 5 quarters ago. They have really turned that around in a major way, and it's made me an extremely happy shareholder. Total connected accounts on the tech platform all the way up to a record high 151 million. It's up about 10 million members on a quarter-over-quarter basis and about 25 million members on a year-over-year basis. So the last business segment we got to look at is financial services. Are you ready for these growth numbers? They're absolutely ridiculous. So on a year-over-year basis, net interest income all the way up to $120 million for a 106% increase on a year-over-year basis. Non-interest income up 34% on a year-over-year basis, and that brings total net revenue for financial services up to $150.5 million, and an 86% increase on a year-over-year basis on the financial services revenue side. That's ridiculous. Even better than that, once again, they're running the business very, very impressively and very wisely and very smart. They only had an 8% rise in directly attributable expenses on the financial services side, which means, once again, contribution profit absolutely exploded. They swung from a $24 million loss to a $37 million profit on the financial services side, an immeasurable change, over a $50 million swing in a 1-year span. Very, very impressive. SoFi is killing it. Turning that profitability corner is a game changer for SoFi. I think they've hit the point of no return with that, and they're going to be profitable every single quarter from here on out, making the small amount of spend increase lead to massive revenue increases. SoFi grew total deposits by 16%, all the way up to $21.6 billion by the end of the quarter. And when we look at financial services product ads, SoFi Money up 61% year over year, Invest up 1% year over year, credit card up 32%, refer loans up 34%, SoFi Relay up 64%, and then SoFi at Work up 34%, for a total financial services products increase of 42% on a year over year basis. And we already talked a whole lot about guidance earlier in the video, but just one more thing to talk about on guidance is that they're still saying lending revenue is going to be 92 to 95% of 2023 levels for full year 2024. Okay, so that's down a little bit. Not great, but they did warn us 1 quarter ago that that was going to happen, and it's not the biggest deal in the world because they're putting their spin and they're putting their effort on the tech platform and the financial services, which is really where they need to grow that revenue anyway. So they can get to a 50-50 split between loans and then tech platform and financial services, which is what they said they're going to do. They're going to achieve that by the end of 2024. The way they're going to do that, they say here, is tech platform will grow by approximately 20% year over year, and financial services revenue is expected to grow at more than 75% on a year over year basis. Absolutely ridiculous. Love to see that. Killing it on those 2 business segments, tech platform and financial services. Loans is going to be a little bit weaker this year based on the macro environment, but this is why SoFi is an awesome company to invest in. It's not just a bank where they're screwed because the macro environment is tough. They've also got the Galileo and Technesis, the technology platform, and they've got financial services absolutely killing it, growing in a massive way. They're well diversified. They're ready to weather the 2024 and early 2025 storm as we get less rate cuts than we thought we were going to. Monetary and fiscal policy is going to stay a little tighter than we thought it was going to. But SoFi is still going to be able to grow in a massive way through this. They're going to grow their revenues very respectably. They're going to grow their earnings per share very respectably. I expect that they're going to raise their guidance numbers each and every quarter this year. And by the end of 2024, we're going to say, wow, what an absolutely historic, ridiculously awesome year for SoFi. Once again, I am not mad about this earnings at all. I don't think the 10% drop was warranted. I was out there buying more shares today. I want to hear what you were doing out there. Were you buying more shares? Are you done with SoFi? Are you tired of the drama show? Let me know what you're doing with SoFi. I appreciate you being here in a major way. Thank you so much. Have a great day.